It's an honor to be here with Auto Success today. In this video, I'm going to outline the 3 funding programs that are available through the government stimulus plan to help businesses weather the storm and cover the operating expenses during the crisis. The first program is called PPP. That stands for the Paycheck Protection Program. They supply up to $10 million of forgivable funds to help businesses cover payroll, rent, utilities, and mortgage interest. All those funds are potentially fully forgivable, in essence becoming like a grant, providing free funding to help you during this crisis, as long as you follow the rules, which I'll explain. The second is called the EIDL. Now the EIDL stands for the Economic Injury Disaster Loan. Now that provides up to $2 million of low interest rate loans, interest as low as 3.75%. You only have to pay over 30 years, and you can defer the payment for a year without any interest. But again, you have to pay that one back. The third program is called MSLP, which is the Main Street Lending Program. That's for bigger businesses. You're eligible for that if you have 10,000 or less employees or $2.5 billion or less in revenue. That loan can be up to $25 million if you get a brand new loan, but it can be up to $150 million if you expand on a pre-existing loan. Now these again are loans you have to pay back. You'll have to pay it back within 4 years. And the interest rate is a function of the wholesale rate that the government charges banks. Right now, that interest rate would be approximately 4 to 5%. So now what I'm going to do is I'm going to walk you through each of these programs in detail so you understand all the terms. And we've created a table to make it easy for you. First, let's take a look at the Paycheck Protection Program. First question is eligibility. If you have 500 or less employees, and the business has been in business since February 15th, 2020 or earlier, you're eligible. You may still be eligible if you have more than 500 employees. You can have up to 1,500 employees if you're in certain sectors according to the SBA guidelines. And you can have up to 500 employees per location under certain franchise sectors. In order to determine if those companies are eligible, just visit the website and there is a detailed guide where you can see up to how many employees you can have by sector. The loan amount is lesser of $10 million or 2.5 times your average monthly payroll. Now the important part here is your payroll, because payroll can include a number of eligible expenses that could dramatically increase the size of the maximum amount you can borrow. So it's very important that you understand how the program defines payroll. If you go to the website, there's actually a paycheck protection calculator that will automate all the calculations, not only of your traditional payroll, but all the other eligible expenses that you can include. And then you'll times that by 2.5 to determine your maximum loan amount. For those portions that are forgiven, it'll function like a grant, essentially free funding. And as long as you follow the rules, the funds will be forgiven. Let me be specific though. The rules are that you would need to, A, spend the money in the loan period, which is the 8 weeks that starts when you receive the loan and ends 8 weeks later. B, you need to spend the money on approved expenses. 75% of the funds have to be spent on payroll, 25% on any combination of rent, utilities, or mortgage interest. And then third, you have to have the same employee count. If you have 10% less employee count, they'll deduct 10% from your forgivable amount. So if you borrowed $1 million, but you have 10% less employees, they will require you to pay 10% of that $1 million back. And they'll only forgive 90% because you only kept 90% of your employees. If you keep 80% of your employees, you'll only be able to keep you only have 80% of the loan forgiven, and so on. The last criteria is compensation. You're allowed to reduce the average compensation of your employees by 25% maximum. Compared to the last full quarter when you paid that individual employee. Every dollar that you deduct from any given employee's compensation compared to the last full quarter, every dollar below 25% compensation reduction will come right off of your forgivable loan amount. And so the way it works is, if you spend the money in the 8 weeks of the loan period on the approved areas of payroll, which is 75%, rent, utility, and mortgage interest, and you maintain the same headcount, and you don't reduce anyone's pay below 25% less than the previous quarter, you have 100% loan forgiven. and only be responsible for interest. So it's the most attractive terms of all the programs available. For the amount that is not forgiven, because you didn't follow the rules, that's okay. It'll convert into a traditional loan with an interest rate of only 1 point, and you pay that over 2 years. You can defer payment up to 6 months, although the interest does accrue. You are allowed to prepay, and the cash, again, can be used for many overhead expenses, but if you want it to be forgiven, it's got to be 75% payroll, rent, utilities, and mortgage interest for the other 25%. You can refinance another loan if that other loan is an EIDL loan, which, as I mentioned to you, is the economic injury disaster loan, which we'll get to in a bit, but you can refinance that and roll that into this loan. As far as collateral and personal guarantees, neither are required because there is no recourse for the borrower other than for fraud. And the advantages here are obvious. The funds that you're getting are forgivable. It's also a fairly easy application process with less documents required because you're not expected to pay back the loan. You're just expected to provide documentation to prove your headcount in 2019 and your payroll in 2019. And what's interesting is there's not only no risk to you if you follow the rules, but the banks don't have risk because the government's backstopping 100% of the loan. Finally, the cons is if you don't get forgiveness, it does convert into a loan that you have to pay back within 2 years. But at 1% interest at a time like this, that's a good downside. As far as applications, you can apply through any SBA lender and any participating FDIC bank. Recommend that you apply through your local bank that you already have a banking relationship with, because they'll already have a lot of the documentation that they need from you. And a lot of these banks are prioritizing clients that have a pre-existing relationship. Some businesses are applying to multiple banks. If you do that, it's critically important that once you get an approval, you notify the other lender so that you don't take 2 loans for the same purpose, which is not allowed under the program. Now let me walk you through the second stimulus funding program available to you, which is called EIDL, which stands for Economic Injury Disaster Loan. In short, we call it the disaster loan. So now, first question is eligibility. You've got to have 500 or less employees. The business had to be operational from February 15 through 2020 or earlier. And there are similar exceptions for organizations that qualify for those exceptions under the SBA guidelines. You can find out those exceptions on our website or by going to sba.gov. You can get up to $2 million, and the term is 30 years. So it's a long term at only 3.75%. You can defer up to 1 year worth of payments, although interest will accrue. You don't have to make principal payments or interest payments. You can prepay without penalty, and you can use the funds for overhead. It's just that you want to use them for different overhead than the Paycheck Protection Program because you're not allowed to use the 2 loans for the same purposes. That's why you want to prioritize the PPP loan just for the areas where you're going to get forgiven. The payroll, the utilities, rent, and mortgage interest. And then therefore use the EIDL for the other areas that you cannot be forgiven for. And then refinancing debt, you're not allowed to refinance debt with the EIDL. You are allowed to refinance the EIDL debt under the PPP, but you cannot use these funds to refinance any other debt. As far as collateral, you may be required to provide collateral for loans over $25,000, and there may be a little forgiveness here, up to $10,000 in what they call an express loan, but you'll have to ask your lender if that's still available. And as far as personal guarantees, there are no personal guarantees required for loans under $200,000, but they may require it for loans above that. Ask them because some of those guidelines are changing due to the crisis. The pros and advantages of this type of loan is that it's 30 years. You know, it's a long time to pay it back. Not to mention, you don't have to make a payment for a year. And the interest rate's low and the application process is fairly easy. The cons is if it's over $200,000 and they require collateral, then you're risking some of the assets of the company. Also, if they ask for any personal guarantees, I would definitely suggest that you speak to your financial advisors because anything that you're not willing to personally risk, you should probably not sign on for. The only other con is that max forgiveness could be $10,000 or nothing. But again, very attractive terms for a loan that you can take 30 years to pay. How you apply is solely through the SBA.gov right now. It's only SBA approved lenders. There's about 800 of them. And they may open that up to all of the lenders that are currently eligible to do PPP, which are FDIC lenders who decided to participate. The third funding program is the MSLP. That stands for the Main Street Lending Program. Let me walk you through how that works, starting with eligibility. To be eligible for the Main Street Loan Program, you have to have 10,000 or less employees or less than $2.5 billion in revenue. The loan amount is up to $25 million or $150 million, depending on whether you initiate a new loan or you expand a pre-existing loan. The term is 4 years, and the rate is adjustable. And the rate will be 2.5 to 4 points above the internal wholesale rate that the government charges banks. Right now, it's about 4%, but will go up as that rate goes up because it's adjustable. Now, this loan, like the EIDL, can have deferred payments for a year, although interest does accrue, and you can prepay it without penalty. As far as use of proceeds, really, this can be used for any reasonable efforts to maintain overhead, payroll, and to retain your workers. As far as refinancing, you're not allowed to use this money to refinance other debt. And as far as collateral, there is no collateral for new loans existing. However, pre-existing loans may already have collateral attached. There's no forgiveness for this loan at all. It does have to be paid back, but there is no guarantee required, just have to be a company in good financial standing. As far as the pros or the advantages, there is no collateral, there's a low interest rate, there's low risk, for you as a borrower, but also for the bank to approve, because most of these loans are going to be bought. 95% are bought by the government, so it should be easy for you and the lender. The only con is that there is no forgiveness, and you may have collateral on an existing loan, so I would suggest that you really look at what type of collateral and personal guarantees you have in the existing loan, because while you can actually expand that existing loan to borrow more, you also could have more personal risk. For the business, you could have collateral that's risk, and personally, you could have a guarantee that's at risk. So ask your lender if it's possible to segregate those attributes of the expanded loan so that you don't have to have the personal guarantee or the collateral of the business. The bank should not be concerned because they're not on the hook for the loan other than 5%, but they may be. This is where some of the smaller, nimbler, more flexible banks may be more flexible than some of the bigger, more conservative banks. In order to apply, you can go to any FDIC participating lender. Now that you have a general overview of the 3 funding programs available through the U.S. stimulus plan, we're going to walk you through each of those programs in more detail. First is the Paycheck Protection Program. Now, the Paycheck Protection Program provides up to $10 million of forgivable funding to businesses to cover their payroll, rent, utilities, and mortgage interest. And I'm going to walk you through how the program works. First, the highlights. Highlight number 1 is you can get $10 million that can be fully forgiven. So it's hard to get a better deal than that as long as you follow the rules. The terms are not only forgivable, but there's no cost to apply, there's no personal guarantees, there's no collateral, and there's no recourse. And it's very easy to be eligible. You just have to be a business that has 500 or less employees that were in operational February 15, 2020 or earlier, and you're eligible. You may even be eligible if you have more employees than that, up to 1,500 employees actually, according to the SBA, who provides exceptions for some industry categories. For example, some franchises can have up to 500 employees per location. So it's important you check those SBA guidelines on our website to make sure that you're eligible. And then the approval process is fairly easy. You just have to show that you were in business February 15th, that you had a payroll last year. You have to show them what that payroll was in your financial statements, and provide basic documentation, and you could get funded. So now let me walk you through some of the more common questions and answers for the PPP, so you can get up to $10 million of forgivable funding. Number 1 is, am I eligible? The answer is yes if you have 500 or less employees, and you were in operation February 15th or earlier. I do want to mention that you also could be a sole proprietor, an independent contractor, you could be a 501(c)(3). You can be an individual who's self-employed who regularly carries on any trade or business. You could be a tribal business that meets the SBA size standard. You could be a small business that otherwise meets the SBA standard, which you can check on our website. But you could also be a 501(c)(19), a veteran organization that meets the SBA size standards. Now, There are some exceptions that allow you to be eligible even if you don't fit those criteria. For example, for the food services sector, the 500 employee rule is applied on a per physical location basis. So if it's a restaurant or a franchise. Also, if you're operating a franchise or receive financial assistance from an approved small business investment company, the normal affiliation rules don't apply. So that is eligible. I do want to make sure that I'm clear that the 500 employee threshold includes all employees, full-time, part-time, and any other status. The next thing I want to mention is how much can we borrow? Very common question. Well, 10 million is the max, or the lesser of 10 million, or 2.5 times your payroll. This is very important because not everybody calculates payroll the same, and the definition of payroll under this program is a lot broader than the definition of payroll traditionally, because it includes a lot of expenses that are eligible under payroll that you may not expect. Let me just share a few. Salary, wages, or commission or similar compensation. Payment of cash, tip, or equivalent. Payment for vacation, parental, family, medical, or sick leave. Allowance for dismissal or separation if you terminated somebody. Payment required for the provisions of group health benefits, including insurance premiums, but also payment of any retirement benefit or payment of state and local taxes assessed on compensation of the employee. That doesn't include federal, but it does include state and local. This is important because if you don't include these, you have a smaller payroll amount that they times by 2.5. So your total max amount that you can borrow is lower. But if you add the eligible expenses, you're going to have a higher payroll. Times 2.5, you're going to have a higher max loan amount. Utilize the calculator on our website because that'll walk through every step. It can get a bit complicated and cumbersome, but it'll ask you one field at a time. You plug it in and it'll show you how you can get the max amount under the program rules by including all of your eligible payroll expenses. And I'd say that's the most important part when it comes to maximizing the amount of money you can borrow and be forgiven for. The next question is, will this be forgiven, and if so, how? And you can get full forgiveness as long as you follow the rules. And there's 4 major ones. Number 1, you need to spend the money in the 8-week period, starting the day you get it, and 8 weeks later. Number 2, you got to spend the money on eligible expenses. 75% there's 4 categories of those eligible expenses, right? But 75% of it's got to go to payroll. The other 25% can go to the other 3, which is rent, utilities, and mortgage interest. So if you spend the money in those 8 weeks on those 4 things, you're good, except for 2 other things. Do you have the same average headcount of employees that you had in the previous year during the loan period? And secondly, are you compensating them at a similar level? Similar being defined at no lower than 25% below their average pay in the previous full quarter for any individual employee. Now, if you violate those 2, it's not all or nothing. They'll just adjust it proportionally. Let me be specific. So for employees, if in 2019 I had 100 employees on average, and this loan period I have 100 employees on average, I'm good. I'm eligible for 100% forgiveness. If I have 10% less employees, let's say instead of 100 employees I have 90, then if I borrowed $1 million, 10% of it won't be forgiven. 90% will, because I retained 90% of my employees. If I only retain 80% of my employees, only 80% will be forgiven. Only 70% of my employees, only 70% will be forgiven. The rest turns into a loan, which I'll get to in a second. The other adjustment is for compensation. Let's say I'm paying everybody no less than 25% below their pay last full quarter. Then I'm good. But let's say I pay one person $10,000 less than that. Well, in my $1 million loan, I'm going to have to deduct $10,000 because that's not going to be forgiven. I'm going to have to pay that back. But the rest is forgivable. Let's say I have 10 people that I paid $10,000 below the 25% pay cut from the previous full quarter. Well, 10 times 10,000 is 100,000. So I take my $1 million loan, I deduct 100 grand, $900,000 forgivable, 100,000 is not. So in summary, use the money in the 8 weeks, all in the approved areas, keep the same head count, maintain similar comp, totally forgiven. For the part that's not forgiven, converts into a 2-year loan. It's got to be paid after 2 years, but only 1% interest, so it's still a great deal. But ideally, you maximize the forgivable amount unless you have to use it for some other reason, then it converts into a loan. So that answers, can I be forgiven? Then the question is, well, what will lenders be looking for? And the lenders, just to be very clear, are not looking for your ability to pay. They're solely looking to ensure that you had a business February 15th or earlier, and that you've got people on payroll. You're gonna have to provide them with financials from the previous year, as well as payroll documentation from the previous year. And you can get all of the detailed documentation in the playbook on the website. In the action plan, it'll actually have a whole section for application documentation. You wanna make sure you get that to your financial advisors ASAP so that they can get all that documentation prepared for you properly so that you're not waiting during the application process because you don't wanna create your own delays. The next question is, what happens if I've let people off before I got the funding? Well, the good news is they'll allow you to hire those people back in order to get your head count to where it was on average the previous year. And you can hire them back. You don't have to hire back the same people. You can hire back anybody you want at any compensation level you want. They just have to be at the same status. So if they were full-time before, they've got to be full-time this time around. And if they are employees that used to work for you the past full quarter, you have to make sure you don't pay them less than 25% below that. If they're new employees, you can pay them whatever you want. Now, keep looking out on our website for updated rules on this because there hasn't been a lot of clarity on exactly when you need to hire the people back. Some people say you have to hire them back by the time the loan begins. And no later than 30 days after the inception of the PPP program. But there's other parts of the rules that say you can hire them back by June 30th, which would likely be towards the end or after your loan period. So that's something you want to check on this website to find out when you need to hire those people back. But the good news is you can hire people back and you can use the funds that the government's giving you to pay for the people you're hiring back. And in this case, it really pays you to pay them. Because if you use it to pay them and you have the same head count, you don't have to pay the money back. So the next question is, well, how do I get it fully forgiven? Like, what's the process after this is over? Well, you need to keep all your documentation for how you spent the money. I suggest that you have a separate bank account for the PPP funds. And in that bank account, everyone knows that 75% of it has to go to payroll and the other 25% can go to any combination of rent, utilities, and mortgage interest. And you need to keep that documentation, and then you need to apply for forgiveness and provide all that documentation to your lender. And they've got, I believe it's 30 days to give you a decision on forgiveness. As long as you follow the rules, you should be fully forgiven. How do you apply for the loan? Well, how you apply for this loan is you go to any SBA lender or any FDIC lender who's participating in the program. Most big banks are. It's best that you go with a bank that you know and that knows you, ideally that even already has done business with you because they may actually already have a lot of the documentation that you're gonna need in order to get the loan. Not to mention a lot of the banks are prioritizing pre-existing relationships because they've got more demand for applications than they have the ability to process them. So working with a bank that you have a pre-existing relationship with could mean that you get processed faster. However, some businesses are applying to more than one bank because different banks have different infrastructure and ability to absorb these loans. And you really want to go with whoever can approve you quicker because it's first come, first serve, and it's limited funding. There's more people that want the funds and need the funds than funds available. So you may want to apply to many, but once you get approved, you can only accept one. It'd be illegal to accept more than one of these loans for the same purpose. I also encourage you to please ask your financial advisors and your legal advisors on what to do in this and all matters because we're just business people who are passing on what we've learned to expedite your process, but you should certainly double and triple check with your legal and financial advisors to make sure that you're making the right decisions. And so that is the PPP program. To get more information, visit the website where you'll get a very detailed explainer video that'll walk you through every part of the program rules and loan terms, including animated FAQs, also a calculator that'll automate all of your calculations to maximize your total loan amount, and it'll provide you step-by-step instructions on how to ensure that you get full forgiveness of that loan. So it essentially turns into a grant and free funding to cover your overhead. The second funding program that's available through the U.S. stimulus plan is called the Economic Injury Disaster Loan, EIDL. We just call it the disaster loans. Now, I'm going to walk you through what the highlights of those terms are, but also some of the frequently asked questions and how you can apply. So some of the highlights. Similar to the PPP, it's affordable funding that you can get quickly to cover overhead. Businesses can borrow up to $2 million to cover operating expenses. However, with this particular program, you cannot cover the same expenses that you cover in the PPP. However, the PPP, if you already have an EIDL loan, they can actually roll that in and refinance. So you've got one big loan through PPP. Ask your lender if that means the EIDL can become forgivable, because the only downside to this one compared to PPP, one of the downsides is it's not fully forgivable. They do have something called an express loan, where they'll give you up to like $10,000 that can be forgivable, but the rest you have to pay back, although it's over 30 years. Incredible terms, 3.75% interest over 30 years. And to be eligible, it's the same as the PPP. You just have to be a small business, 500 less employees, that was in business February 20th or earlier. And all the exceptions exist under the SBA guidelines for this program, just like it does for PPP. So there's a chance you could actually be eligible if you have up to 1,500 employees or 500 per location if you're an eligible franchisee. As far as the approval process, it's fairly easy. You are going to need potentially some more documents than you would for PPP, because they have to prove that you are able to pay it back. And these applications are through the SBA.gov only through SBA lenders, not through FDIC. However, I believe that it's very likely that they'll increase the availability for applications to FDIC lenders in the future. So keep an eye out on the website to see if that's the case, because it'll be a lot easier for you to do this to a lender that you already have a relationship with, and there's a better chance that that's an FDIC lender than an SBA lender. Now let's walk through the commonly asked questions. Am I eligible? Like I said, if you have 500 or less employees and you're in business, you're eligible, and you may be eligible if you have more employees. Check the website and all the guidelines for the industry sector that you're in to see what your limits are for eligibility under the SBA guidelines. How much can I borrow? You can borrow up to $2 million. And how that is calculated is they're going to take your operating expenses when you give them all your financials for 2019, and they're going to most likely reduce all your cost of goods sold, and then cut your annual expenses in half to give you essentially a loan for 6 months worth of operating expenses to help you weather the storm. When will you get the money? Well, the $10,000 of it, which is supposed to be an express loan, is supposed to happen very quickly, within 3 days of receiving an application. However, they've been taking longer these days for obvious reasons. But the other program can take up to approximately a month. What can you use the funds for? You can use the funds for operating expenses. Again, if you take a PPP loan out and this loan out, it's important that you do not use this loan for what you're going to use the PPP loan for, because you're not allowed to use them for the same thing. So reserve the PPP for your payroll, obviously, because 75% of it has to be paid there. And then, of course, utilities and rent and mortgage interest. All the other operating expense, you can use the EIDL for, except for refinancing other debt, as I described earlier. Now, the terms are, you have 30 years to pay it back at 3.75% interest. Other terms, you've got no personal guarantees for less than $200,000. Business assets like machinery and equipment can be used to secure the loans of up to $500,000. Larger loans may require real estate, whether it's your businesses or your own. If you have it, if you don't, the agency says it will not turn borrowers away because they lack collateral. Obviously, the less collateral that you put up, the better, and the less guarantees you put up, the better. I suspect they're going to loosen the EIDL requirements more and more with time, because this is a legacy loan program that is in place for all disasters. And this disaster in particular, I think, is unique. And if they treat it like PPP, I think they'll loosen up the requirements for personal guarantees for the larger amounts and collateral for the larger amounts. What will lenders be looking for? Well, similar documentation. You're going to need your financials for 2019. You're going to need your payroll for 2019. And all of the documents that are required are in the playbook on our website for the EIDL program. Make sure you use the action plan that'll give you step-by-step instructions on not only what documents you need, but how to compile those documents so they're accurate. Because if they're not, you could either have a rejection or you get delayed and pushed to the back of the line. And by the time they process you, funds could have run out by then. So to expedite this process, make sure you follow the action plan for all the documentation you need to get prepared, which are listed in the action plan. And that is it for the EIDL. There are some additional tools on the website, not just the action plan, but also calculators and tutorials that'll walk you through every part of the bill rules, but also every part of the loan terms so that you can be clear and confident in what you're signing on to. The third lending program and funding program from the U.S. stimulus is called the Main Street Lending Program. Now, the Main Street Lending Program highlights are you can get more money. It's really designed for if they're small, medium-sized businesses, this is for the medium or bigger sized business. You can get up to $25 million if you create a new loan. But they can also expand a pre-existing loan through an existing lender that you have up to $150 million. And so those are the two types of loans, new for $25 million or an existing expansion for up to $150 million. These are also unsecured loans that are low risk for you because they don't require you to personally guarantee them. They may require some collateral depending on the size of the loan from the company. But they're also great terms for the lender because the government's buying 95% of them. So you have very little risk for the lender. It's not too hard to be eligible. It's actually easier than the PPP and the EIDL in that you can have a business that has 10,000 or less employees or 2.5 billion in revenue or less. In either of those categories, you're eligible. And the approval process promises to be fast and easy. We'll see. But the good news is you can apply through any FDIC bank that's participating, which are likely a lot of the big banks that are already participating in the PPP. Some of the common questions are, am I eligible? As I mentioned, very easy eligibility, 10,000 employees, 2.5 billion in revenue. If you're south of either of those, you're eligible. Now the business had to be created or organized in the United States, to be specific, and the loans originated on or after April 8th, 2020 are eligible for the Main Street Loan Program. Loans originated before April 8th are eligible for the Main Street existing loan facility. So what that means is if I want to get a new loan, obviously it's got to be after April 8th. But if I want to expand a pre-existing loan, it's got to be a loan that was already in place before April 8th, 2020. How much can I borrow? Well, as I said, it depends. If it's a new loan, it's up to $25 million. If it's a existing loan that you're expanding, it's up to $150 million. Let me explain how both of those work. For the new loan facility, the max of $25 million is what you can get. Now, this says, right here, it says, it's $25 million or an amount that, when added to the borrower's existing and outstanding committed debt, that's important, so you have to add this to that, it cannot exceed 4 times the borrower's 2019 earnings before EBITDA, interest, tax, depreciation, and amortization. So what you have to do is you cannot take out a loan that's bigger than either 25 million or 4 times your earnings before interest, tax, depreciation, amortization. After you add to your existing outstanding and committed debt. Outstanding means you've already drawn that debt. Committed means you have a credit line, so you have access to it, and you're committed to pay it back if you do access it. So you have to take 4 times your 2019 EBITDA. That's your max. And that's got to include your existing outstanding and committed debt. And that cannot be higher than 25 million. So that's if it's a new loan. Now, if it's an existing loan, it can be up to 150 million, but it's got a few more rules, and I'm going to read them to you. For the existing loan to be expanded, the maximum loan is the lesser of 150 million or 30% of the borrower's existing outstanding and committed but undrawn bank debt. So if you've got a line of credit, you can only get 30% of that. Or an amount that, when added to the borrower's outstanding and committed loan amounts that are undrawn or drawn, doesn't exceed 6 times your 2019 earnings before interest, tax, depreciation, and amortization. So again, it's the lesser of 150 million or 30% of the borrower's existing outstanding committed but undrawn bank debt, or an amount that, when added to the borrower's existing outstanding committed but undrawn debt, doesn't exceed 6 times the borrower's 2019 earnings before interest, tax, depreciation, and amortization. And just like the other one says you can't exceed 4 times your 2019 EBITDA. This one says you can't exceed 6 times your EBITDA. And in both cases, you've got to include your existing and outstanding and committed debt, whether it's drawn or undrawn. Now, will this loan be forgiven? No. You've got to pay it back. And the terms are 4 years. And the way it works is you've got a adjustable interest rate. And it says loans will be priced using the adjustable secured overnight financing rate. Again, it's an adjustable rate using the secured overnight financing rate plus 2.5 to 4 percentage points. And there's also an upfront origination fee of 1% of the loan. A few other things to consider is the principal and interest payments can be deferred for a year, and the loans can be paid off early without any prepayment penalty. Now, what are some other restrictions that come with this loan? One, banks must attest that the proceeds of any loans won't be used to repay or refinance a pre-existing loan or line of credit that bank has extended to the borrower. The borrower is also going to have to do the same. Borrowers must commit to refrain from using proceeds of the new loan to repay any other loan balance. Borrowers must attest that they require financing due to the challenges prompted by Corona. Recipients cannot pay dividends or buy back stock during the course of the loan or for 12 months after it's been paid off. You should, if you're an LLC and you pay your own taxes out of distributions out of the organization. Our hope is that the standard operating procedures and the rules will be modified. They usually will come out with these rules as they realize the inadequacies of the program based on input from people as they're writing the rules, and they're writing the rules right now for this program. Highly paid executives and officers are also prohibited from increasing the pay of any employee whose compensation exceeds $425,000 in 2019. So those are some of the restrictions. Now, what are the lenders going to be looking for in order to approve these loans? You're going to need all your 2019 financials, your payroll, etc., similar to these other programs, and all the documentation required is included in the action plans on the website. And I will say that the Fed's creating 2 different lending facilities for this, just for you to be aware of. And they're buying back 95% loans, so it's going to be just a lot easier for the lenders to approve. But these facilities are one for new loans and one for pre-existing loans. Businesses can obtain the financing only from one of these 2 facilities, either a new loan or a pre-existing expansion of a loan. And banks, eligible banks, will make a loan or reissue part of the existing loan accordingly. The other little footnote is this is only available to businesses that are in good financial standing before the crisis, and lenders will be expected to use customary underwriting standards to ensure that these loans are prudently incurred. Now that you have a more complete understanding of the 3 programs available under the U.S. stimulus plan, I suggest that you visit the website and you share it with everyone on your leadership team, and in particular, you go through the playbook for the loan programs that you want to learn about. And in those playbooks, you will have multimedia tutorials that explain every part of the program, animated FAQs that answer common questions, calculators that help you automate the calculation to maximize the amount of money you can borrow, and a step-by-step action plan that will help you get everything you need prepared to complete your application properly, to get funded faster, and to maximize how much of those loans can be forgiven. In addition, the more urgent things you need to do right now is call your financial advisors and make sure they start preparing your paperwork, including your 2019 financials and payroll statements. Second, call your lender to see if they are participating in any of these programs and if they can prioritize your application to ensure you get it processed quickly so you can get funded faster. Third, have a meeting with your leadership team to review all of these funding programs and create financial planning scenarios to look at what your business would look like if you have 75% of your revenue, 50%, 25%, or none. but with the support of these programs to see how many people you can keep on the payroll and to see what you can do to service your customers during this crisis, but also prepare to thrive through the recovery. Thank you for taking the time to learn about these 3 funding programs. Please make sure you visit stimulusplanner.com to learn more about them, but also to get other free resources and tools that can help you survive through this crisis and hopefully thrive through the recovery. I hope that this information and these free resources help you protect your business and all of the families that you serve.